Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading floor. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer before we get into the charts, before we get into the nitty gritty. Let's praise Him. All right, bow our heads. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. 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 Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down at the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realization. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you will ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And I am the Trader Capital. Our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes.
Weekly target going into this week, as usual, is 3%. Mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today. Excited to continue to grow. All right, and get 1% better. Another day, get 1% better. Let's do it. Let's do it. All right. Like I said, nothing of note to mention. All right. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Wednesday, August 26th. We're almost done with August. All right. Golly, this year's almost done, mate. That's crazy. Anyway, we had high impact news come out at 8:30. Another one coming out at 10:30. We have news today, making it an optimal day to take a trade. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. Weekly program going to this week has been established as a buy program. Okay, let's go ahead and review price action overnight to see if anything's happened to change our weekly program. Then we'll go ahead and adjust our higher time frame ranges and then continue with our 3-step trading process. What's it saying? What's it saying? Big this up. As you can see, nothing's really happened in price to change our weekly program. All right, for our weekly program to adjust now, price would need to come all the way down here, take Monday's low. All right, that would change our weekly program from a buy to a sell program. So until that happens, we're maintaining our condition as a buy program for the week. Let's go ahead and adjust our higher time frame ranges. Twenty day, 20 days, still good for now. Still good for now. Previous week stays the same. Last 3 days, we have 1, 2, 3. High goes here. Low stays where it's at. 1, 2, 3. Previous day, high is here. Previous day's low. Oh, inside bar, yes, inside day yesterday. Okay, we didn't take either side of previous day. We still haven't taken either side of yesterday's previous day. So if you're using previous day's range to determine your condition coming into today, it hasn't been established yet. If you were using it yesterday, it hadn't been established. Okay, this is why I have multiple ranges to refer to, because sometimes your main range that you're using will not be taken. Either side will not be taken. If you're fine not taking any trades, then you're fine not taking any trades. Nothing wrong with that. Good on higher time frame ranges. Let's proceed. Oh, let me see something real quick. Let's take a quick look at the weekly. Okay. No inefficiencies in here. Except this volume imbalance. Then we have this
or suspension block here. Below, you have this as the next draw. Cool. As we proceed to give you what you need, very typical lows. Yesterday, I did take a trade during lunch session, which brought me to break even on the day. It was this one right here. First partial was here. Then I had to sit through all of this. It came like 2 handles from my stop loss. My stop loss was the high of this candle, which is 301.75. And the high of this candle was 299.75. So 2 handles away from my stop loss. Kept me in, and then it took me out at terminus. And then from there, it flipped. Ain't that some shit right there? I actually have to take a trade on this account here because I got that 20-day notice. We'll start with this one. End up $36. Just a wee bit over break even. I was down 222 on the day. Hey. All right, let's get going. Got a small daily range. Oh my goodness. Good morning. Oh, hold on. Let me get this first. It's gonna be hard to grab that. Below dealing range, we got previous day's low. Above dealing range, we have AM session, open range, buy side, and previous day's high. Should we need it up there, I'll grab it. But for now, let me just do it. Let's just do it. That's Asia low. And we're ready for kickoff in 2 seconds. Ding, 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 ding. 9:30 open. They're ringing the alarm in the stock exchange. Decent size open range gap is above price. Okay, so we gapped down. Okay, it's above price, so we gap down. So we have a discount gap down. Today is popping off. Let's see what it brings today. Let's see what today brings. Let's see what's in store for us today in these markets. shooting right up. We've hit consequent encroachment of open range gap. Just means the midpoint of the gap, okay? Just means the midpoint. What it do? What it do? What it do? Good morrow, good people. My loyal peeps. I love you guys. I hope you know that. I love you all. Thank you for the support. I'm not gonna forget you guys when we make it to the top. I guess we're all going there together, not just me. When we make it to the top, we're the only ones I want to be around. Because all these broke people, they ain't gonna have money to do what we gonna be able to do. So I'm just saying. I'm just saying. I'm just saying. They're gonna be too busy working their 9 to 5s. They won't even be able to travel with us. So it is what it is. We're putting the work in now, right? So we can do what we want later. We're grinding today so we can glide tomorrow and live the life that we want to live. And nobody's stopping us, okay? It's a different level of success that we're heading to. Oh, I won't forget you, Mr. West. You'll be right next to us. What are you talking about? We all going together. We are all going together. I'm going to make sure of that. If it's the last thing I do on this earth, to get her. Watching this inefficiency in here. Support price higher to smash dealing range buy side. We've got a small portion of open range gap left. So let's see if he's going to leave it open today. Take me to the top. Take me to the top. I want to go to the top, top, top. We locked in. We locked in. We locked in for real, for real. Yep, about to smash dealing range high. I said I was watching this to support price higher, and it's doing exactly that, respecting the midpoint of this inefficiency here. I don't need to draw it to see it. Take me to the top. Take me to the top. I want to go to the top, 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 top. Price been consolidating around previous week's low. A lot this week. It's the third day of the week, so yeah, I can say that it's been consolidating around previous week's low. All right, about to disrespect this inefficiency here. It says psych. You said what? You want me to do what to what? Create relative equal highs up here. Intrigued. We do have relative equal lows down here as well. With these lows as well. I am also watching to see if we take Monday's low after taking Monday's high. Yes, last week we didn't do that, but every other week before that, that's what's happened in price. So intrigued. Because I'm still collecting data on that part as well. Still paying attention to that. Right? Watching this inefficiency here. Last line of defense for dealing range sell side. If we disrespect this inefficiency, then dealing range low is next. It's next in line. Yesterday, lunch session, that was a better setup for me, but I was in an earlier setup, which kept me in luckily. But there was a cleaner setup post, and it was actually a little bit before 12:30. Super duper clean. Very nice. Continuation sell setup. Super duper nice. That's actually the setup that kept me in my trade. Ugh, I was so happy to see. Not happy, but like I was just like I was shocked because I'm like I was preparing for that for my stop loss to get smashed. I was preparing for it. Let me show you. It's going to my journal because Twitter is now my journal. We can see I took a screenshot of it. See how close I've been on Twitter since 2009, December 2009. Two handles from stop, mate. Trade management. All right. I don't move my stop until second partial. All right. Look how close we came to my stop. Look at this. Look at this. Look at this. Super duper close. I'm like, yeah, I'm done for. But then I saw this setup. I'm like, okay, ooh, there's hope. There's hope. Yeah, this was the setup I should have been in, but I was in this one, which is okay. Post 11:30. We had time. Okay, not the best time, but we still have time, right? But post obviously 12 is much better to anticipate yourself, just like post 10 a.m., right? Post open range. Super duper close. At this point, I'm like, you know what? I'm ready to screenshot my L. I'm ready to see how much drawdown I mitigated, all right? Because I obviously took partials. It was 3 contracts. I took 2 off at -1. I had 1 left. I was ready to be like, okay, at least I mitigated some loss from this morning. And it was like, psych, we're not doing that. You're on side, baby. You shall not pause. You shall not pause. This is the dead end for you. All right. This is dead end. I love it. I love being on side, you know. I love being on side and the price action backs you when you're on side, you know. It backs you, you know. I love it. I was like counting my chips. The fat lady was so close to the stage. But she just wasn't fast enough. She just wasn't fast enough. You know why? Because she's fat. Okay. When you're on side, price action will let you know that you're on side. The candlesticks will let you know that you're on side. Nothing for me to do here. Nothing for me to do. Waiting for step 1 condition. Let me go ahead and no, that's not what I'm clicking. I'm clicking this. I believe it's going to be a buy today. I think we're going to take buy side. I'm just being premature right now, but could be completely wrong. Price could prove me completely wrong. You know, let me just delete it. No, let's give it 5 more minutes. It's about to smash it right now. We're waiting on step 1 to be established condition. All right. determine bias, right? Depending on your style of trading, right, will determine what time-based range you use to determine your condition, okay? I recommend about at least 2 time-based ranges, at least 2. Each range, each time-based range gives us 3 important pieces of information, all right? We get the high, which is this blue line up here, right? We get the 50%, which is this yellow line here, equilibrium. And we get the low, all right? You want to have all 3 on the chart. The high, the midpoint, and the low, all right? The key levels. Key levels to frame a setup around, to anticipate a setup forming around those levels, right? The midpoint of that range, the 50%, the equilibrium, the yellow line, divides your dealing range into 2, okay? Above 50% is a premium. Below 50% is a discount, all right? Best buying condition will occur in the discount. Best selling condition will occur in the premium. Best, not only, right? Bear in mind, I'm not saying only sell in the premium and only buy in the discount, okay? I'm saying the best conditions, right? The best buying conditions will happen in the discount, and the best selling conditions will happen in the premium, okay? It's important to note that premium and discount isn't the signal itself. Just because price comes up into a premium doesn't mean straight away sell. It doesn't mean it's a sell signal, okay? It's just the location where we prefer step 2 to happen, the stage, right? Nothing to tall for me here. Mate. What the hell? What the hell? What the Shelly? All right, we're taking daily range buy side, establishing our condition today as a buy program. So we're looking to be a buyer of this market. Ideally, right? Best buying condition, like I just said, will happen in a discount. So ideally, what I want to see is a retracement, right, into a discount to then anticipate the continuation. However, right, I understand that sometimes price might not retrace into a discount to give us the best buying condition, right? The only other key level I would buy at, right, is at that high, right? Either below 50% or at that high. I understand I'm buying in a premium. I know I'm buying in a premium. But I know that sometimes price will not always retrace, right, into the best location where we're anticipating what we're anticipating, okay? I also understand the price can retrace to reverse. At that point, it takes the even range sell side, and our bias will change from a buy program to a sell program, okay? So we maintain a buy program until dealing range low is taken. Taken as in price trades to it and through it. Wherever this number is, you want a price to trade to it and through it. So if we get to 29,133, 133, 132, that's to it and through it, all right? To it and through it, to it and through it. So right now we've established our condition as a buy program. We're looking to be a buyer of this market, all right? Like I said, ideally, I would want price to retrace into a discount to then catch the continuation, but it doesn't have to do that. And plus, I'm waiting till post 10:30. Post 10 o'clock, let's see if we get it set up. But ideally, I'm waiting till this high impact news comes out. Not that this is a high impact news I can take a trade before. Okay, we talked about this yesterday. The three high impact news not to take a trade before are CPI, NFP, and FOMC. All right, at least 15 minutes before those news release comes out, you don't want to be in the market. I'm gonna wait till post 10 o'clock. We'll see what 950 macro is saying, but ideally, I learn my lessons. I learned my lesson. I'm watching this inefficiency here, how price behaves in it. We have step one, all right? Now we're waiting for step two, stage. What did we have above price? What did we have above price? We have yesterday's AM session open range buy side, and we have previous day's low as a draw on liquidity. So this is where I'm anticipating price to draw to head to, okay? Up here, previous day's high. Since we've taken dealing range buy side, I'm anticipating that price wants to continue going higher. So my drawn liquidity is previous day's high, which is above price, okay? So let's see how price gravitate towards our drawn liquidity. And if it gives us the opportunity to partake in that move up there. What would change that for me here, okay? What would change that for me is price coming down here and taking dealing range sell side, dealing range low, which is 12 a.m. to 9:15. Lowest low, highest high, midpoint. If we take the low, right, that will flip my bias from a buy program to a sell program. So I'm not just changing bias based on any fluctuation in price, right? I have parameters. I have levels that I need to see get taken, right? To then say that, okay, yes, this is what the market wants to do. I'm not imposing my will on the market, right? I'm letting the market tell me what it wants to do based on the time-based range, which depends on your style of trading, right? That's one of the first decisions that you have to decide when you step into onto this arena, right? How are you going to approach the market, right? You're going to be a scalper, a day trader, a short-term trader, swing trader, position trader, or long-term investor. Don't recommend the last three, to be honest. Even short-term is a bit funky nowadays, but depends on your risk tolerance, right? Depends on your risk tolerance, your lifestyle, and how much time you can dedicate towards the chart. Also depends on your personality as well, right? If you're quick at making fast decisions, right? If you can change your mind, if you know you're quick at making decisions, then scalping, day trading is up your alley, right? But if it takes you a while and you have to think about it, you have to go home, talk to the wife, talk to the family members, right? To then make a decision, okay? Then you're more like a short-term swing trader where it takes a while for price to adjust, okay? For you to take your time and then think about things and process it, okay? So those are like the two personalities I would say. And how much aura you have? I don't know if that's got anything to do with it, right? But yeah, that could have something to do with it. How much patience you have as well, right? How much patience you have, right? If you don't have a lot of patience, maybe lower time frames, all right? Maybe day trading, scalping, all right? If you don't have a lot of patience. But if you have patience for days, all right, and you can wait about 3 to 5 days, or about a day to 3 days to find out that you're wrong in your decision making, then position trading and swing trading are for you, right? If you don't mind those. For me, I would hate to sit in a trade for like even 5 hours, more than 5 hours, all right, to find out that I'm wrong. Oh my goodness, that will irk my bloody nerves. I will irk me. I'd rather know immediately that I'm offside so I can change what I'm doing, right? Rethink, reassure, refine, and adjust to the market, right? But hey, if you have the patience to wait about a day or two to find out that you're wrong, that's okay. That's on you, right? Trading is a solo sport, right? You have to find out what works for you. What may work for me, all right, may not work for you. Okay, so figure out what your personality is, what works for you, and then pick your style of trading based on that. You can't try just because you start off with a style of trading doesn't mean that's what you're going to end with, right? Master one style of trading, and then when you master that, and you obviously, if you want to make full trading your full-time thing, right? Once you are consistent in that style of trading, right, and you're meeting your ends and you want to make this a full-time career, then you can experiment with different styles of trading, right? Because your lifestyle will change. So the trading style that you pick now, it's not necessarily going to be the trading style you end with, okay? There's nothing wrong with being slow. Nothing wrong with that. Nothing wrong with that. Just pick a style that matches that, right? Pick a style that matches that. For you, I would say short-term trading would be good for you. You're holding for like 2 to 3 days at max, all right? So by the end of the week, you're potentially off. You'll be trading like maybe Tuesday, Wednesday, maybe Monday, and then you hold for the remainder of the week, and you hit your target. Take targets if you want to hold over the weekend. That's a personal preference. After you've taken some targets and you've adjusted loss, stop loss, right? Adjusted risk, then you do that. But just find what works for you, what you can handle, right? What your risk tolerance can handle. That's where demo comes into play, right? When you practice on the demo, you get that feel. Even if you start feeling some things in the demo, then yeah, this is not for me. This ain't me. I need to adjust this. I need to fix it. But first, start with what your time constraints allow you to do, right? Some of us are slow. That's funny. For me, I love day trading. That is where my heart is set at. Day trading, maybe potentially scalping too, because some trades are scalp. They're not really a day. They're not really considered a day trade, right? I know immediately if I'm wrong or if I'm right. Price will let me know immediately, okay? And I can really adjust to market conditions quicker, all right, because I'm on the lower time frame. But I'm not purely on the lower time frame. I base myself based on a higher time frame, where my higher time frame is going. But entry wise, right? I enter on a lower time frame. I'm able to adjust quicker to different market conditions on the lower time frame. Also, patience, like I said, may seem like I have patience, but I don't. I only have it for here. Patience ain't that great. 5 minutes until open range is complete. Ain't seen anything really here that I would engage in. I was talking too much yesterday during was it 10:50 macro. I missed the move. It was like it was hidden though. If you wasn't paying attention to that retracement setup, you wouldn't have seen it, and I wasn't paying attention. That's why I didn't see it. But after the fact, when I analyzed the data from yesterday, I was like, "What? This was right here in my face. I didn't even realize it." 1050, we had a retracement set up around previous week's low. Like I said, if you weren't looking for it, it was hidden. But that's why we analyze the data, right? We look back on when the day is done, right? Look at the bigger picture. Hindsight is 2020, but that's how we learn, that's how we grow. When the day is done, go back into price action and literally pick out the clean setups. Be picky. Pick it out. Like, hey, this is where the move was. Okay, what caused this move, right? Go back, analyze the data, analyze the data. That's what we do here. We're data analysts. Come back down. Short-term low taking below external. Market structure shift above here. I'm watching it. Not one that I would engage in right now. Like I said, I'm waiting till post 10 o'clock. Preferably 10:30 after the news release. This is what I'm talking about here. Time and price, right? We have time, 9:30. Price is here, dealing range buy side, right? Then we're anticipating our two institutional patterns, right? We trade below, come back up, come below, short-term low is taken. Short-term low is taken, market structure shift back above that external liquidity, which is dealing range buy side. Like I said, this is the only other place I would buy, if not in a discount. Let's see if anything is here with this one. Let's watch what it does. Time and price. Time is the most important thing when looking to take a trade, right? Because IPTA, she runs on time. You want to learn more? You want to learn more? I'mTheTrader.com. Put that bit right here. I'mTheTrader.com. Check it out. Join the academy. It's free. Everything on there is free. Free. We have a free beginner training video. What every new and expiring trader must know before they put risk in the market. It's everything that I wish I knew when I started. And it's been over 6 years now. I've been studying these markets for over 6 years. Keyword studying. Let's see how many contracts this would have allowed us in here. Two contracts. So -1 would have been a terminus. Wasn't paying attention while it was happening, which is fine. I don't mind watching it after the fact. So this is where our terminus will be. So let's see if we get it. It's giving us bread and butter though. Hold on. It's giving us bread and butter, which is 0.5. Bread and butter puts food on the table. You're fed. You're fed for the day. That's it. That's all you need. HIMTheTrader.com. Oh, so our daily condition is in line with our weekly. Cool. Ooh, 10 o'clock is upon us. 10 o'clock. 10 o'clock is here. Wait, what's happening there? Fix the tab then. Fix the tab then. So 10 o'clock gives us opening range. That in itself is a time-based range. So I'm going to note the lowest low of opening range. If you're scalping, this is the range that you want to focus on. This and first hour dealing range, which is 9:30 to 10:30. Opening range, we got the highest high, lowest low, and the midpoint of that. Time-based ranges. You don't need all the ranges, right? At least two starting out, at least two. And once you build more experience, right? Collect more data. If you want to add one more, you can add on as you get adjusted to the, whatever time-based range you're using. For me, I think we counted it the other day. I have 7. I have 7 time-based ranges on my chart. I think I have the experience to handle them. If you don't have at least 2 years of experience, stick with 2 and then add gradually, okay? Let's start with a small and we'll go higher. Open range, which is 9:30 to 10 o'clock. First hour's dealing range, which is 9:30 to 10:30. Then we have our dealing range, our main dealing range, which is 12 a.m. to 9:15. Previous day, the last 3 days, highs and lows, high, lows, and midpoint range. Previous week and 20-day look back period. Seven is that's a perfect number actually. Completion. That's all I need. It's more than enough. More than enough opportunities with those 7 ranges. And you always want to see the high, the midpoint, which is the 50% equilibrium, and the low. All right. We need to see all 3. Like what? What was that? I use open range to determine my session condition, okay? Midpoints here. Cool. Just waiting for step 2 stage. Majority of the time is 80% waiting, 20% actually doing things. But that waiting is what gets people, right? They see the markets moving, they see these candlesticks moving, and they just want to be in it. They just want to be in it. Even the model is not saying get in it. They just want to be part of the move. They want to be part of the market. That's not how it works, though. You gotta let the market come to you. The market doesn't like when you're desperate. Okay, you can sense it. You can sense the desperation. It cannibalizes on desperation. This is the patient things I was talking about, the patience thing. What I would want to see right now is price take, open range buy side, Give me a retracement set up into a discount to then continue higher. That is what ideally what I would like to see. Excuse me. Price action this week so far has been very, very nice. Take dealing range sell side, get the retracement into a premium array, continuation back to the downside. Beautiful. That's what we want to see. Take dealing range sell side, establish a sell program. We get that retracement into a premium. Take buy side above in that premium. Continuation to the downside. Doesn't quite exactly come back to the low, but gives you enough. Yeah, I'm loving it. Take dealing range sell side, get that retracement into a premium. Continuation to the downside. This was the day where we didn't actually take either side of dealing range, but we did take open range sell side. All right, comes into a premium. Continuation to the downside. So we always anticipate price to continue in the direction of the side that it takes of our dealing range, right? Depending on what dealing range you're using. We always anticipate price to continue on the side of the dealing range, right? So once the range is established, right? We're waiting for price to take either the high or the low, right? To establish our bias for the day, for the session, for the week, however you want to look at it. If you're short-term trading, right, you're more concerned with the weekly condition, which is based on Monday's range or previous week's range. Monday, 12 a.m. to 12 a.m. The high, low, midpoint. If the low is taken, right, you're in a sell program. We assume price will continue operating in that direction until the opposite side of the range is taken, which would be the high, right? If the high is taken, you're in a buy program. Once again, you assume price wants to continue going higher until the low is taken. At that point, your bias would adjust. So far, nothing here. The first 30 minutes of trading. Wouldn't be looking good on this setup here. Last line in the sand for this would be body closure and the main threshold of this order block here. This down close candle. Last down close candle before price started shooting up. I'm waiting to anticipate the continuation to the buy side in here around where previous week's low is at. Yeah, you have to draw it out. It's not automatically on my chart either. Yeah, but it still doesn't extend out though. It's just the lines up here. This gray line, it just shows you where it's at, but it doesn't extend. Yep, 9:30 to 10. Yeah, I'm gonna put the indicators on the academy. I'm still working on it. My time and price indicators, I'm gonna put them on the academy, the updated version. Still on the old version. You would have been getting smashed out of this one here. Good thing we just watched, right? Didn't partake in that. Nothing wrong with that. Still would have been a valid loss if you took it. I'll take those losses over and over and over and over and over and again. But we have a specific time we're waiting for our setup to happen, right? And that's based on the economic calendar. We have a specific time. So you can literally schedule your trading around the economic calendar, which we all have access to, right? This is my main economic calendar, Econoday, right? This is always what you want to look at before you look at the charts, okay? We're looking for days with high to medium impact news. If you see this red, that's a high impact news. This green is a medium impact news. We're looking for a day that has a red or green news folder, okay? You can use Forex Factory for the look ahead, which is what I do because Econoday only gives you the week of, right? So you can schedule, you can go for the whole year, the economic calendar is out, right? You can schedule your trading around the days where you see medium to high impact news. We're all the way in November, right? This is going to be our tentative schedule in November here. So the economic calendar lets us know when to anticipate our setup. We're going into, what's the next month? September. Oh, is NFP next week? It's NFP, not for professionals. All right. Yeah, it's still there. You should see that little dash line here. Probably that's what you have, little dash line, but it doesn't extend. This gives me my price. Well, let's start with the time first. Let's start with the time first. There's not much to discuss on the time, but you get the weekly dividers that divides the week on the higher time frame, on the 4 hour and above. And we get midnight. You get midnight, the daily dividers in the midnight on the lower time frame. And then on your entry time frame, 5 minute and below, you get the session lines, right? We get the session lines because if you had this on this, that would be too much freaking lines. You don't want to see that on the intermediate time frame and the higher time frame. And then for the price indicators, we have two because I couldn't fit all of them in one indicator. This one gives us, what does it give us? Session highs and lows. If you're into that, right? You can always, I'm going this week without session highs and lows. This is how I started. This was my foundation, session highs and lows. But then I evolved as I collected more data, right? What I started to look for in price shifted, it adjusted as I was, in front of the charts more. So you get session highs and lows. What else is open range gap? Okay, which I do use, which is on my chart. If you want to show the previous open range, I show the last three days. You get midnight open, 8:30 open price, 9:30 open price, and you get the weekly, the Monday and the bottom here. You don't see it yet, but you get the weekly time at the bottom. You get open range, high and low for all time frames for a morning, lunch, and PM session. That's on the first price indicator. The second one gives you, if you want to show previous days highs and lows, as many as you want to show. All right, if you want to show three days, look back in terms of previous days highs and lows, it does that for you. Previous weeks highs and low, previous months highs and low. First presenter fair value gap. If you want that, I don't have that on my chart anymore. And the look back period, right? The look back period for the higher time frame, the 20-day look back period, 40-day look back period, and 20-day look back period. That's this one. Hold on, let me go on the daily. That's only on the daily, visible on the daily. Wrong chart, mate. Wrong chart, mate. Nothing on the chart for us here right now. Go on daily. That's this the gray box that you see here, the 20-day look back period for the higher time frame. This is 20-day look back here, which is part of one of my high time frame ranges. This is 40-day look back and 60-day look back. All right, that's what if they're seeking. She's looking back 20 days. She's looking back 40 days. She's looking back 60 days for liquidity and inefficiencies. Okay, liquidity and inefficiencies in those look back period. That's what she's seeking. Oh, and we also have obviously new week opening gap, but that's not one of mine. That's just one on TradingView I use. But I'm gonna put them in the academy so you can go ahead and attach them to your TradingView chart and use whatever you want to use, right? Just because I'm not using certain things doesn't mean that you don't need to use them. Experiment, test them out, right? Test them out, see what you gravitate towards, and keep them on your charts. But I don't like to manually, put out my times and stuff. I just like it done for me, right? Work smarter, not harder, right? So that's what I use the indicators for. The indicators don't really like help me take a trade or anything. They just literally plot my time and my price, right? Time and price. I don't use the indicators for setup. I don't use the indicators for anything. It's just me being technically lazy and letting technology do the heavy lifting in terms of plotting the time and the price. Okay, come back to open range consequent encroachment, but we still haven't touched equilibrium of dealing range. We have touched equilibrium of open range. Still nothing here for me. Waiting patiently for my setup. Waiting patiently for my setup. And if it doesn't present itself today, then you know what? I take no trades today and I feel no type of way. We're back at it tomorrow. Tomorrow and Friday will be a tape reading session for Jackson Hole Symposium. It comes around once a year, right? It's a bunch of people. I don't know who appoints them to that position. All right, but they meet up to discuss economic policies. I don't know, it's a closed door meeting, but people think that they have enough to make economic policy, so we don't care what they got going on, right? We're focused on our economy, not on the economy. All right, don't worry about what they got going on, what the governments are doing, what's going on in the economy. Focus on your economy. All right, once your economy is right, it don't matter what the hell the economy is doing, right? Because you're straight within yourself, right? Your economy is solid, right? They do all of these things to distract you. There's so many things out there in the world that will distract you from what you need to do. It's all a distraction, right? The enemy can't get to you. That's how they get to you, right? By distracting you, taking your eye off the ball from what you need to do. It's also a spiritual warfare, but we ain't gonna get into it. We're not gonna get into that. We're not gonna get into it. So we're getting that retracement, okay? It didn't give us the opportunity to partake in the retracement. It doesn't have to. It doesn't have to. I do understand that it can retrace to reverse, right? We can retrace to take dealing range low. At that point, my bias will change from a buy program to a sell program. Until that happens, I'm always anticipating the price is retracing to continue going higher, right? If this, then that. That algorithmic principles that we follow here, okay? Because we're trying to match if there's energy. All right, we're hitting equilibrium. So we're at a location where I'll be interested in the continuation buy setup. Now, I'm waiting for step 2 stage, right? Waiting for the 2 institutional patterns that we look for in the direction of where I'm anticipating price to go. So right here, this is what I want to see in price. These 2 things. Come down, come up, come down, take that short-term low below it, market structure shift back above. My entry will be here. Stop loss will be here. Market structure shift below. Either this or come down, back below the EQ, come back above, below, fail to take that short-term low there, market structure shift back above. My entry will be on that market structure shift. Wait for price to come back to continue higher. These are the 2 patterns I'm looking for at this level right here, okay? This is a breaker, this is a mitigation. Here we fail to take that short-term low, here we do take that short-term low, okay? Market structure shift back above. I personally prefer that both legs, all right, trade to and through back into that key level, but it doesn't have to. But these are the 2 patterns I'm looking for at this level. If I don't see that, I do nothing. If I see that, I'm going to engage and the outcome will be out of my hands. So that's the stage. Let's see if it sets up. Less than 6 minutes until first hour of trading and the high impact news comes out. Short-term low here. What's the low? What's the low? 2025, 2025. We didn't trade to it and through it. It's the same low. Okay, so I'm not regarding that as it taking it. It has to trade to it and through it. We also don't have to take it too, right? As long as we get that market structure shift back above here, that will be a mitigation pattern. The breaker is the highest probability setup, okay? The breaker is what we want. We want to see that breaker. What's the low? Yep, we trade below it now. Okay, we've taken that short-term low. Market structure shift back up here. I'll be interested in a continuation. Where is my long? Nothing for me to do yet. I'm not chasing price, right? We don't chase price. We don't chase price. We anticipate price. Anticipate. Okay, it could potentially be having a retrace to reverse, but we have open range sell side here. So let's see how price behaves there. That could also give us the continuation to the upside. It's a discount array. Just means it's below 50% of our dealing range, makes it a discount array. It's a key level below 50%. I'm also intrigued, like I said, I'm also intrigued to see if we take Monday's low. We do have relatively equal lows down here. We're respecting opening new week opening gap. If they're seeking liquidity and she's repricing into any inefficiencies in price. Liquidity in the forms of session highs and lows, daily highs and lows, weekly highs and lows, monthly highs and lows. Inefficiencies in terms of open range gap, new week opening gap, fair value gaps, volume imbalances, gaps in price. Still the high that needs to go for me to be interested in anything. Yeah, it's heading. It looks like it's heading for dealing range sell side there. Ba-da-da-ba-ba. Ba-da-da-ba-ba. Okay, 950. Oh, this one, market structures. All right, that's fair. All right, now let's talk about that. Okay, I got a negative 0.5. Oh, so you went for 0.5 and -1. All right, Queen of Retracements. She's back. She saw this right here, which is a larger range. All right, we take dealing range buy side, establish a buy as a condition. Congrats, congrats. TP's hit. I'm out. All right, she's done for the day. All right, we love to hear it. Let's talk about your trade now, though. We trade. We go back above external liquidity dealing range buy side. Come back below. We take buy side above it here. All right, market structure shift back below here. This is baby trader's setup that she's in, the retracement setup. It was a breaker setup, breaker pattern. Bearish market structure shift. Here, let's see. It's a big range though. You wow, yeah, that's a big. Oh, it did what it needed to do. It did what it needed to do. I hear you. I'm here for it. So breaker pattern, right? This is what she saw. The retracement back down into a discount right here. Where's my drawing to? Oh, you half risk? Okay. All right. Look at you managing the trade and that. This is what she saw at this key level right here, dealing range buy side. Boom. Come back below. Take a short-term high above it. Market structure shift back below. She waited for price to come back into that market structure shift to continue lower into a discount of that range. This breaker pattern here, the retracement setup, that's exactly what baby trader partook in right here in this setup. Okay, using we have time, we have price. Okay, price is dealing range buy side. She called that retracement into a discount. Okay, good for you, girl. Love to see it. Love to see it. You kept that very quiet. She said, I'm not saying nothing until it hits targets. I'm not saying nothing. I'm not saying jack crap until I hit my targets. I can mess with that. I can mess with that. So that's a retracement setup, what she caught, right? Give her big range. So fair enough for you to take something of a 0.5 because it was a decent size range there. First hour of trading. I know you would have said, but I'm just saying you're waiting for the trade outcome to say something. Um, first hour. Oh, why do I always extend this? Like, take it to 12. Good for you. Good for you. Love that you were able to see that and capitalize on it. Just like that, she done. I don't have to send, how do I send a clapping emoji on this thing? Clap, clap, clap. There is none. I don't like the things that go going on here. Easy peasy. Following a simple process, right? Love to see that. I wasn't even looking at that. I wasn't even paying attention to that. Just because of that range size. We don't like them things there, but hey, just because I don't like it, just because I don't see it, doesn't mean somebody else can't see it, and like it and love it. And it works out for them. First hour of trading, high impact news has come out. Now we're waiting to see if we get our setup. Oh, there goes the clap. Yeah. Clap, clap, clap it up, clap it up, clap it up, clap it up. On the computer, it doesn't give me the clap, clap, clap. It doesn't give me the emojis, unfortunately. We here for it, baby trader. We here for it. I know Dai had also seen a retracement set up there, but she was waiting until after 10 o'clock. Oh no, was it a continuation? Yeah, it was a continuation. On her 9 to 5 at that. On her 9 to 5. She catching trades on her 9 to 5. We love to see it. Love to see it. Right? Hunting now. We're hunting. Pay attention. Because sometimes they do try to disguise it. All right? They do try to disguise it. And if you're not looking for it, you won't find it. Just like yesterday. Could potentially retrace the reverse here. So you go in two contracts, I'm assuming then, if you took one off at 0.5 and one off at -1, two contracts. Ooh, that's a big ass stop though. That's a big ass stop. Your risk tolerance is more than me, man. I love that though. Because I don't know where I'm at right now. I don't know if I could have done it. Hold on, let's see. I don't even think it would have given me a contract. Oh no, yeah, one contract, Larry. At my current risk parameters, it would have given me one contract. Yeah, you would have done what you needed to do, right? Yeah. So you completely went against the tool, yeah? Yo, that's funny. So based on her risk parameters, right, on her risk to reward tool here, she could it didn't even give her enough contracts to get in, but she got in. The tool is just for guidance. Okay, that's fair. That's fair. I'm with you. I'm with you. That's fair. That's fair. It's what you can stomach, though, isn't it? Yeah, it's what you can stomach. Da 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 da. Mhm. She said the tool is for guidance. That's 100% fair. I can mess with that. I can mess with it. That was your first trade of the week? First winner chicken dinner of the week. My mentor said by Wednesday he knows he can make 6 figures. By Wednesday. I'm trying to get on that confidence level right there. He knows for a fact by Wednesday. I'm watching this. I don't really mess with the range here. So I'm not as brave as Baby Trader. I'm not as brave as her. I ain't that brave. You do though. You do gotta be. You do gotta be. I respect it. I respect it. I wasn't even paying attention to it, to be honest. I ain't even realize. I ain't even see that. Yep. That is the only thing promised to us. Losses are the only thing promised to us. All right. 2 promises when you step into this industry. You experience a losing trade and you experience a series of losing trades. Okay. That's why we're always preparing for that series of losing trades to occur. So only guarantee, you know how they say the only thing promised is in life is death and taxes. Well, when it comes to the financial markets, the only thing promised to us is losses and series of losses. So we're always preparing for that loss. We're always preparing for that next loss. We're always preparing for that series of losses that's coming. Yeah. I'm watching this here. I'm watching it. It would have given me 1 contract. Let's see. I don't get nothing. I don't get nothing. Right? Day trading doesn't mean everyday trading. We'll just live off Baby Trader's setup if we don't get anything here. We live off that. No risk, no Rari. Scared money makes no money. That's big factamondos. Big factamondos. Here she goes, leaving again. She said, "I've got my trade for the day. You guys go ahead, do your thing. I'm gonna dip for a little bit." I swear, there's nobody in HR, because how many reports we have to put on this girl? You know what? We let you off today. We'll let you off today. Today, you get a pass. You get a hall pass. You can go ahead and do what you need to do. Just make sure you pick up your hall pass. All right. Next time you go somewhere, just say hall pass. We know what's up. I give it to you today. Today and today only is only valid for today and today only. There will be no promotion tomorrow. It's a sales tactic, Get the person to make a decision today. Because tomorrow we don't know what the promotion, there might not be no promotion. But no, I have to go home, talk to the wife. Let's call the wife right now. Let's call the wife right now. Let's secure this promotion, right? Let's lock you in the promotion today. And if you change your mind tomorrow, then that's tomorrow's problem. But today, let's lock in the promotion, all right? Call the wife right now. What's the first 3 digits of the wife's number? Then you wait. Nah, but she's at work. You're going to get a rebuttal. Nah, but she's at work. So let's text her. You can text her, right? Honey, 911. I'm sure she's going to call you once she sees that. You have to try. Push the customer. Push them to make the decision, all right? Because sometimes they need to be pushed to that decision, right? That's going to benefit. Only if it's going to benefit them, you push them to make that decision, right? I used to be in sales, folks. I used to be in sales. I used to sell direct TV in was it Best Buy? Then we went to Target. Then we went to Wally World. I lived a lot of lives, man. I lived a lot of lives. Imagine trying to sell people a satellite dish on their house. It was tough, mate. It was tough. But I don't want to see the satellite on my roof. Don't worry about it, man. We can put it to the side where you won't even see it, right? Your next door neighbor literally just got one the other day and he's loving it. All right. He has a right, he's proud of it. He's showing it to his whole neighbors. But sales is a valuable skill to have. 100% a valuable skill to have. I learned a lot from that job. All right. A lot that I'm taking into my next phase of life. You gotta be able to sell yourself though, You gotta be able to sell yourself. As long as it's the right product, right? And you're proud of that product, it's going to be easy to sell that product. But if you're not proud of that product, if you believe that product is not going to help people, right? Then you're not going to be so into selling that product, right? You're not even going to even try to convince people to be part of that. If you don't feel it, you have to sell yourself first. And for me, I'm sold on this bitch. I'm sold in the financial markets. I'm sold on trading. So it's easy for me to convince somebody, right, that this is the best decision for them because it is the best decision for them. Let's see what 1050 macro, next 15-minute candle is starting off. 5 minutes to 1050 macro. Let's see if we get anything here. Yesterday, I waited to 1050. There was something there, but I wasn't paying attention. Today, I'm not gonna do it again. We're hunting. I'm on hunting mode. Okay, don't distract me. Don't do it. But the promotion is for today and today only. If it goes without us, it goes without us as well, right? That's fair. I'm watching this as well. Let's see, where was -1 on this one? All right, back above, dealing range buy side. Whee! No, it was a 10, it was a 950 macro I set up. Boom, boom. So that means I can use structure before that time. Because that's what I've been noticing. I can use structure before the time kicks off. That's something I've been like trying to decide on whether I want to use structure before. But the data is pushing me that way. The data is pushing me that way. Even like here, this was the structure before, right? Okay, let's see how this one pans out then. You know, you have procedures and protocols in place. Oh, she's out. I love it. I appreciate you. Appreciate you. Thank you for being here today. Hope you picked up something for today's session. Good trade. Good on your mate. She said be right back and came back and said goodbye. That is wild action right there. That is a wow. That's behavior of a I just took a winning trade. I'm done. Back to my 9 to 5. Back to my 9 to 5. Now they got like 80% of my attention now. Happy bloody hunting. Thank you. We need it. We're still here in the woods trying to hunt together. Yo, I cannot spell for shit. Let me just put a word I can spell. Cannot spell for jack shit. It's looking like I might have to catch something for lunch, you know? I miss the mornings. 1050 macro. -1 is up here somewhere, so let's see if we get that. Yeah, as I was saying, you have procedures and protocols in place, right? Based on your data collected. But as the market obviously evolves and changes and moves and you collect more data, right? And you start seeing certain things and you need to adjust, right? Based on the data that the market is giving back to you. But don't adjust based on feelings and, oh, yeah, I feel like this is going to happen. I feel like that. No, 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 no. Adjust and refine based on the data, right? Based on what the market is showing you. What I'm adjusting it and refining is that first, I used to require my time, right? Once I see the time, the vertical line, then I want to anticipate the pattern, the pattern to form. But what the market is showing me recently, right? What the data is coming back with is that I can use prior structure before that time, okay? Before that time, but it completes after the time comes in. I don't know if this is making any sense to anybody. It's making sense to me because I know what I'm talking about, okay? So now, like here, after 10:30, my current procedures and protocols, right, would require the setup to occur after the 10:30. After 10:30, I'd want to see the pattern form after 10:30. However, the data that I'm seeing so far in price action is that the setup can occur before the time, right, before 10:30, and then obviously it completes here within that time frame. We took that short-term low here, all right, came back, displaced higher, market structure shift back above after the time, if that makes sense. So I can use the structure before the time kicks off is what the data is coming back to me. Even yesterday, that lunch session setup was using, it was after 10:30, after 12:30, but I was using the structure prior to 10:30, ding, ding, and then it gave it. So interesting data that I now don't require the setup to occur post time. It can start before the time and then complete after the time. Anyway, we're still watching this, see what it does. If it does anything. I'm watching price in this inefficiency. I am following the price action after the entry here, okay? I am following, even though I haven't been talking about it. Price respected this inefficiency, okay? In terms of the bodies are staying in the upper portion of this inefficiency, all right? If you entered this setup, these will be signs that you're on side, okay? Now I'm watching price at this inefficiency and how it behaves. Do we have a gap there? I want price to use this, all right, to support price higher to our first target, which is -1. And see if there's a gap there. Is there a gap there? There is a gap there. There is a gap. Just because we missed the entry doesn't mean we can't pay attention to the price action to see if we're on side, we're on a trade. Nothing wrong with tape reading. Once you miss a setup, nothing wrong with it. Just more data to collect, more confidence to build with no attachment. Baby trader really said, yeah, I'm done here. There's no more for me here. And that's all you need, right? You get your setup, shut off the charts, go about the rest of your day. Yeah, you don't need to be glued to these markets, right? If you give it the opportunity, the market will soak up all of your time. You come in, you hunt, you get your pound of flesh, and you go home. Come back tomorrow, do it all over again. You get your pound of flesh, there's no need for you to carry on hunting because then you give the opportunity to give that pound of flesh back. And if you give the market the opportunity, it will take that pound of flesh back. Even though we got a closure below the lower portion, right? We're still respecting it, right? The next candle, we close right back above, right? The middle, okay? So still good here on this setup. If we don't get into anything before we get out here, at least we get to watch this. Take it as a bonus here. Let's that's -1 right there. Okay, cool. That will be our a little cookie for showing up today, I guess. We'll take it. But it's just more data, right? But now I know, right? I have confidence behind using prior structure and current time. May not make sense what I'm saying here, but I understand what I'm saying. And if you keep showing up, you too will understand what I'm saying. But you first have to watch the beginner training video to get the lingo. To get the lingo. You can do that at amthetrader.com. Body closures down in here would be not ideal. But first we need to get there, right? Do have previous days EQ in here though, but not something I'd be like looking for. Because we haven't touched any side of previous day. Price really doesn't want to leave previous week's low. Been a huge factor in this week's price action so far. Like we framed a lot of setups this week on previous week's low. Where's open price? Open price up here, so we're below open. Okay. Respecting equilibrium of Monday's range here. Same thing, right? So for my short-term traders, Tuesday 6 p.m. For my short-term traders, potentially Mr. West. Let me see. Let me see where the clean setups was at for you, short-term traders. Bear with me, please. Oh, you would have to sit down in some heat there. South side, like below, like above. Yeah, I'm not seeing 9 clean. Not 9 too clean. In the lower time frame here, yeah, potentially. It would look like there was something here in lower time frame. But yeah, entry would be here. But the stop is fat though. But you're holding for a couple of days and you're targeting up here. Right, let's let the week finish then. Let's see. Down here, partial maybe here. Let's see how the week plays out. But I'm watching here. I'm watching it. I'm collecting the data for our short-term traders. It's 11. 10 minutes. See something. Or we wait till lunch, or I'll be seeing what lunch has in store for me. If nothing, then nothing, innit? We're still respecting this inefficiency, all right? We haven't got any body closures outside of it. So we're still good here on this setup. If you were in this setup, you'd be okay, right? All roads point to -1. Once we start seeing body closures below it, then it'll give you something not to worry about, but like pay attention to, hey, okay, where's the next line of defense for me, right? Then we look at the next line of defense. But so far, it's doing what it needs to do. Need to see it take this buy side. Good data for me today. Good data for me. Just confirming that yes, outside structures is fine. You can do that. It doesn't have to occur after the time, right? It doesn't have to occur after the time. So we'll take it. We'll take it. I'm 1% better for it today. Still hasn't, it's given us bread and butter. For such a big range like that, yes, definitely take something off at 0.5, just like Baby Trader did. Because this is a huge range. Oh my God, this is a big, how many points? At the 100, oh, it's still under 100 actually, 256, anything below 256, it's under 100, so it's not that big of a range, just looks big. Yeah, it just looks too big of a range than what I'm used to, but it's still less than 100 points. But obviously, if you had more contracts, then yeah, 0.5. It's given us bread and butter. Let's see if -1's on the cards though. Take buy side, retracement into a discount, continuation to the upside. This is still our first line of defense here. And I've been searching all my life, searching for someone like you. We'll take satisfaction in today when -1s gets hits in this trade. That will be our satisfaction. Our little cookie. A little cookie for this morning for a tape reading session turned into tape reading session, right? I did say when it was down here, this is still the high that I would need to see go to be interested. But like I said, personally, right now, I would like for it to happen after the time. But now that I'm getting data back from the market, right, it's telling me, hey, I need to adjust, I need to refine. So that's what we'll be doing. We'll be adjusting and we'll be refining based on the data that the market is giving back to us. If I take a trade today, I'll post it on my journal, on the X, formerly Twitter. If you don't follow me on there, check me out. I don't really post nothing, but it's really just a journal for me, really and truly. I use it as a journal to journal my trades I'm in. That's pretty much it. I don't do anything else. Don't talk about nothing else. It's really just a journal. I really just turned it into my journal, really and truly. Losses, wins, everything, it goes here. Well, I took a trade on the phone, eh? Once you master the skill, you can do it from anywhere. We back streaming tomorrow morning. Ooh, time price, baby. Time price, baby. This is dealing range sell side. Bing bang biggity bosh. It's a breaker. Not a breaker, it's a mitigation. Anyway, yeah. My journal. X. That's all it is. All right, we're heading to -1. We're back at dealing range buy side. Let's be realistic in where I'll be getting out in terms of it'll be 3175, 3175, right there, 3175. Now we got a new line of defense here. We got a new line of defense to support price higher. There is a gap there, so I want to include that. That's our new line of defense for our current trade. We want to see price respect the upper portion of it in terms of body closures. Even if we do get body closures, right, we want to see the reaction. We want to see a small portion of it left open. That'll be a good sign, right? That'll be a good sign for our setup. When it doesn't completely fill in an inefficiency, oh my goodness, that's signs of strength, right? Depending on obviously where your price is heading to. Bodies are staying outside of that inefficiency. I want to see that. These are characteristics that, you're on side and there's no need to stress or worry about this trade. Because once you enter the market, it's out of your hands. It's in your model, the market, and the trade management's hands. Your next job then as an analyst, as the trader, right, is to pay attention to the characteristics that the candlesticks are showing you. Are they giving you a storyline that you're on side, or are they giving you a storyline that potentially you're offside, you're on the wrong side of the market? And then what will be your outcome on top of that? If you get the characteristics that you're offside, what's your procedures and protocols, right? Are you going to reduce risk? Are you going to adjust your stop loss? What is your next step, right? These are all things that you need to have in place. And that's based on the data that you're collecting. When you analyze the data, you're extracting information, you're paying attention to the candlesticks. On your winning trades and your losing trades, what's similar? What's different? What's the differences between them? What's the common thing that you're seeing in all the winning trades? What's the common thing you're seeing in all the losing trades, right? That's what we try to look for when we tape reading, when we're in the charts, when we're walking it forward. I'm going to do a trade performance review in a bit, and we'll see if we get -1 here. Bodies tell the story, okay? The wicks do the damages. I'm sure at some point when this body goes all the way down here, you're thinking, oh crap, we're going to close below it. But look where it closed. We close outside of that inefficiency, okay? The wicks do the damages. The bodies tell the story. So far, the body are still on the same storyline that, yes, all roads lead to -1 here. Wicks do the damages. Bodies tell the story. If you don't get anything out of today, pay attention to that. The wicks do the damages, the bodies tell the story. If you don't know what a wick or a body of a candle is, go to that link. I talk about candlesticks patterns that we look for as well. If you don't know what a candlestick is, you cannot read the language of price, okay? It's basics. Just like the alphabets, the candlestick is the alphabet of the market. You cannot speak the language if you don't know what a candlestick is. We're going to do 11-11. Just about missed it almost. We're going to do a trade performance review, but I'm going to stay until we get -1 on this trade, okay? What I did well today is that I showed up, all right? I got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. Showed up today, followed my precision protocols, missed the setup, but felt no type of way about it, okay? Ended up just tape reading the setup, okay? I don't know, it just, for me, this mega freaking range. Plus, we talked about it. I wanted to see the setup happen post 10:30, okay? And now we know that we can use previous structure coming into the time that we're anticipating the setup to form, okay? So they were taking that out of today, okay? Where I fell short today, I woke up at a decent hour. I got my morning routine in. Chart wise showed up, didn't take any trades today. Ended up tape reading, so it's all good. We did watch obviously we watched this retracement setup that baby trader was in. It wasn't something that was on my radar at all right, but it's a valid setup, okay? And we're watching this continuation that hasn't really, just given us -0.5. It hasn't really hit our profit target yet, okay? So still watching that, okay? So 2 solid setups today, not bad. Yeah, all in all, just to say I didn't fall short anywhere. We're about to lose our first line of defense here. Back to this one. There's still no need to panic in this setup, okay? There will be no need to panic in this setup. How I can improve for next day, next trading session is keep showing up, right? That's all I can do. Keep showing up, keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses, okay, deter me, distract me from what I got going on here. This is the best industry, the best job to have. This is the best place to be, all right? So don't let nothing get in your way of achieving greatness, mastering this skill here, because this is the skill that can change your family's history for generations to come, all right, once you master that skill. But other than that, it's been a solid morning from us here. I'm the Trader Capital. No trades for us here this morning, but doesn't mean we won't find something in lunch session and PM session, okay? We'll see what lunch session is saying. If I'm in front of the charts, I am. If I'm not, then it is what it is. I have no qualms, no queries. Not having taken a trade today, okay? No fears, no worries. All right. Day trading, like I said, doesn't mean everyday trading, okay? Some days it's okay to just sit out the market. Like I said, the next 2 days will be a tape reading session. Oh, hold on. I meant to get into this one. I'm going to be obviously seeing how we can navigate, all right, with our current, what we're looking for in terms of price, how we can navigate Jackson Hole Symposium. Okay, price action will get it's a bit sticky, icky during these 2 days, okay? So it'll be really, today's my last trading day, right, in terms of engaging in the market. Tomorrow and Friday will be a tape reading session, all right? We'll build our confidence in being able to navigate this what's the word I'm looking for? News impact, or whatever the hell the symposium is, whatever they got going on. A bunch of rich folks get together and try to decide economic policies. Like, what? Shouldn't the common folk be involved in that decision making? But hey, that's just my opinion. That's why you don't worry about the economy and you worry about your own economy, okay? Get your economy right. Forget what the economy as a whole got going on. It's about my economy, your economy, okay? Da, 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 da. So we lost our first line of defense. Back to a second line. See how it plays out here. There will still be no need to panic in this trade, right? Your stop is all the way down here. Yes, granted, your entry is all the way up here. It's a fat ass range, even though it's less than 100 handles. It just looks fat, don't it? We did come back up to dealing range high. Didn't give us enough opportunity though for retracement. Price might not want to continue higher, right? You always have to keep that in the back of your forefront. You can always be wrong. I won't stay too long today. Won't stay too long. This is why I don't like these big ass ranges, right? Because sometimes you can ask a bit too much out of the market. We're looking for next line of defense here. No inefficiencies. We have a tiny one here, but really and truly nothing. Next would be this order block here, mean threshold. If we lose mean threshold of this down close candle, which just means the middle point of this down close candle, then a body closure in the lower portion of this inefficiency, fat lady is about to hit the stage for you on this setup. Um, there's the midpoint. If we lose the midpoint in terms of body closure, and we close below the lower portion of this inefficiency, your ass is next in line. That's all you need to know. Potentially next in line. Because the fat lady doesn't always sing when you get the the last line in the sand. There's a 20% chance that the fat lady won't always sing. And we've witnessed that here. You'll be back at entry, just a little bit in profit here. Doesn't mean panic. Doesn't mean close the trade. Doesn't mean that you're about to get taken out. Relax, okay? Just chill, just breathe. Pay attention to the candlesticks. That's why when you enter a trade, you don't want to have the profit and loss in terms of monetary value on the chart. I have mine in ticks, okay? I'm looking at the tick value. You can also have the percentage value, but never have the monetary value here because that's all you're going to be paying attention to. Oh my God, I was up 300 bucks and now I'm back minus 200. That's not what matters here, okay? What matters is the candlesticks and the storyline that they're telling you. That's how you get that calm you get the emotions out of it in the charts, right? You're focused on the candlesticks, right? You're not focused on the money, on the outcome of the trade, because that's not what matters here. All right, we're not outcome focused, we're process focused. Okay, we're not trying to bring our emotions into it, because if you allow it, right, fear and greed will come in. All right, no need to panic, no need to stress. Relax, breathe, take a deep breath. If you feel your heart is like beating a bit fast when the trade is going against you, breathe in, hold it for a little bit. Do that about 5 times. And then pay attention to the candlesticks, okay? And if it takes you out, so what? Losses are the only thing promised to us, all right? They're the only guarantee you're going to take a loss. That's why our number one job is capital preservation, all right? Before you get into a trade, you should know how much you're risking. Before I get into a trade, I know if I get taken out of this trade, how much I'm going to lose. And it's 250 right now, right? Next week, next month, I'm upping that to 500 bucks because I've collected enough data, I've built enough confidence. Now that my risk tolerance is increasing, okay? So you need to be aware of these things. Before you enter the trade, you need to know where your entry, where your stop loss is, where you're going to partial, if you're going to partial, and where you're going to, where's your terminus, which means where's your target on the trade, right? Where you're going to, your final target on the trade. You need to know all these things so you're not allowing emotions to come in, right? We talk about all of this in the beginner training video, all right? Check it out. I think it's very useful. I wish I had it, right? Something like that when I started, because it would have put me in the right footing, right? In terms of what I'm doing. It wouldn't have taken me 6 years to be where I'm at right now. Probably would have taken me maybe 1 to 2 years. No need to panic, right? No need to stress. You look for last line in the defenses, okay? And when they start breaking down, that's when you start looking for the next line. But be aware. So far, so good. I like that we failed to even hit the open of this order block here, all right? I want to see body closures back above this inefficiency. This one right here. I want to see body closures back above it. We close in the upper portion. I want to see body closures back above it. When you start paying attention to the candlesticks, once you're in the trade, you don't even panic. Like you're not fearful. You're calm. You're cool. You're collected. You already know you're about to be offside even before it takes you out. Okay, because the candlesticks are telling you the story. And when you become in sync with the candlesticks, it's such a beautiful thing. It's such a beautiful thing to watch these candlesticks, be able to understand the storyline that they're telling you. It's just so nice, man. It's so calm, so peaceful. This is how I always wanted my trading to be. Calm, cool, collected, not enough, like not all that stuff that you be seeing, like panicking and trading and just your heart is beating pretty fast. I used to go through all of that. I used to be in the trading. My heart would be like jumping out my chest. I hated that. I hated it. I hated trading like that. You're just trading off emotions. You're inviting fear and greed. And we don't want no parts of it. We don't want no parts of it. You close back below it now, okay? I said, body closure in the main threshold here will start to reduce probability of our setup here. But I'm going to get out of here soon. I'm going to be out of here soon. And you just watch it on your chart, right? See what happens. See what happens. If you took a loss, you took a loss. I already know if I was to take a loss here, I know I'll be losing about no more than 250. That's a risk that I am accepting. I'm okay with it. All right. It sits well in my stomach, in my belly. I don't get that feeling like, oh shit, that was a big loss. If you get that, oh shit, that's a big loss, you need to reduce your risk. But if you're like, oh, that's a small little ant bite, I can take that, then that's fine. You're okay with that risk. Or maybe you can potentially increase your risk. But that's a personal preference. Personal preference. Watching price here on this 15-minute suspension block. Still no need to panic. No need to stress. Relax, take a deep breath, take a few deep breaths, and get back on the candlesticks. Oh. Every time I say I'm gonna wait till one side of the trade gets hit, it does fuckery. It does fuckery and keeps me here, you know. But you ain't gonna keep me here. You ain't gonna keep me here. We're gonna wrap this show up in a bit. We're gonna wrap this up in a bit. I appreciate everybody tuning in today. I hope you guys got something out of this session today. All right. If anything, right, wicks do the damages, bodies tell the story. And day trading doesn't mean everyday trading. All right. If you don't see the setup clearly and confidently to put risk behind it, then there's nothing wrong with sitting outside the market, letting the market just do its thing and let it go without you. Okay. You don't always have to be in here doing something. You don't. You don't. Like I said, I'm watching the mean threshold of this going into lunch session. Okay, if we lose the mean threshold of this OB here, all right, potentially our ass is next. All right, 80% chance that our ass is next. There's always that 20% though, right? That the fat lady won't sing. Now, if you feel some type of way about not being in the markets, then there's something that you're wrestling with that you need to overcome. All right. Remember, we never master the market, we master ourselves. I'm perfectly okay any day where you're your equity is the same or higher, is a great day, right? I didn't lose anything. I didn't make anything. What I did gain though is experience and data collected. Okay, so I'm still winning. All right, folks. All right. Appreciate y'all tuning in. Like I said, right? Hope you took something out of today's session. If you didn't, let me know. That's cool. That's fine. Cool, fine, collected. We'll close shop at 11:30 since we're already here. We only got 3 more minutes left. Since we're already here, we'll close shop at 11:30. That's when my session ends anyway. So we're already here. Let's see what I go on in the next 3 minutes. Always, if you have any questions, right? Find a way to get out to me, either in the chat, follow me on X. If you have any questions, I don't know if we can have a chat type thing in the academy or a question box in the academy. I'll look into that. But sometime this week, I'm gonna make sure I have the indicators on there and get that next phase of back testing, collecting data, what you need to look for in the processes in the academy there, all free of charge. Like I said, once my net worth, oh, what's the excellent? Once my net worth starts increasing, maybe I still won't put a price tag on it. Maybe it'll still be free. Who knows? It might feel nice and still be free. To the 1% club though, that they will have to pay for that. The 10% club is free, but if you want to join the 1% club, you're gonna have to be part of the inner circle, and I have to see that you're willing to invest in yourself. Is in the chat. Follow me on X. So far, still so good. No need to panic in this trade, right? No need to panic. No need to stress. If you have any questions, if you want to reach out to me, right? X is the place to do that. Or here, right, in the chat when we're live, obviously. Still, all roads point to -1 on this setup, okay? All roads point to -1. No need to fear, no need to panic. We're respecting this 15-minute inefficiency here, okay? Catch you on the flip side, Mr. West. Appreciate you tuning in. We're about to get out of here soon. We're about to wrap this up in the next 7 seconds. Or less than that, actually. 2, 3, 1. All right. Appreciate y'all. We'll be back at it tomorrow. All right. Same time, same place. Will be a tape reading session, for real tape reading session. Today wasn't supposed to be a tape reading session, but it just ended up being that because, you know, I didn't see what I'm used to seeing, okay? But now I'm adjusting and I'm refining my procedures and protocols and my processes and what I'm looking for in price based on the data that I'm getting back from the price action, okay? This is why I love day trading, because you get feedback quick, and the data, there's a lot of data, right? Every day we're in the market, so we're collecting data on a daily basis. But if you're doing like short-term swing trading, it takes a while for you to collect enough data to then start adjusting and things. All right, this is why I prefer day trading. We prefer day trading. I'm the Trader Capital. Doesn't mean you need to do the same, right? You find what fits, find the trading style that fits your personality, fits your time constraints, and fits your risk tolerance. Okay, and we talk about all of this in the beginner training video, right? And the trading style that you pick initially is not always going to be the one that you end up, it's not the one you're going to end up as a career in, right? You start with one based on your current conditions, current circumstances, all right? And once you master that, right, and you start to go towards making this a full-time gig, which it doesn't have to be, once you master that, right, and you can actually afford the time to the market, you want to try something different, a different trading style, that's fair, but you can always stick to your current trading style for a lifetime, right? You don't always have to stick with it. It's my point I'm trying to say. But anyway, I've rambled enough today. I'm a rumbler tumbler. I'm a rumbler tumbler. Appreciate you all. Let's wrap this bad boy up in a bow, pretty little bow, and we'll be here back at it tomorrow. Before we wrap up, I want to leave you with this. There was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading, happy bloody hunting. Remember, you only fail when you quit.